Hello everyone and welcome back to the Founder Files. Today I've got another great episode for you from Lars Veul, the CEO and co-founder of Pargo. Now, obviously to our South African listeners, many of you are going to recognize Pargo because if you are participating in e-commerce, buying anything online, you'll know that they have, 4,000 plus locations. I mean, maybe you didn't know that before, now you do. They've got more than 4,000 plus pickup locations. They've just expanded into Egypt. They've got 500 different pickup locations within Egypt, and they are growing extremely rapidly. They're very unique in their space, but doing super well as a company, and they're a great testimony to what can be done with obviously innovation within the e-commerce space. So in this conversation, we get into, as always, what is the business model, how does it actually work, and how did you grow and scale this? A huge part of this speaks to the focus that Lars, as co-founder of the leadership team of Pargo, have had around what is the core identity of Pargo? What is the core need? What is the core problem they're solving within the market? And part of that, they go kind of deeper in terms of the past couple of years, how they had opportunities to grow and service other needs from customers that were picking up the phone, but the realization of how that reduced their focus and deciding to actually scrap that for a while, even if put the company into a bit of a financially tight spot, but deciding to go back to the core focus originally. So how they went about making those decisions, why they did, but then obviously afterwards, how that focus increased their rate of growth, allowed them to expand into Egypt. And we talk about that in terms of quite a lot of depth. We talk about how it is that they decided on Egypt compared to other countries, how they focused on growing into Egypt, how they managed to get an MD there. So we go into a lot of detail around the focus that they've taken to the company, how they expanded geographically, and just how they've been able to build such a cool business in such a cool place. All right, so if you enjoying this episode or any other episode that you've been listening to and you want to get these nuggets of wisdom, so for example, talking about geographic expansion depth, that this is something that you're thinking about doing, right? What we've been able to do is we've got an insight vault of all of the insights from the podcast, the timestamps to the specific topics. So if we're talking about geographic expansion, you're thinking about Egypt, thinking about Africa, it's not just for Pargo, but all the other episodes of the season so far, we've got those listed in our insight vault that you can have access to if you just help us shape what the next season of the Founder Files is going to look like. So if you want to go into the description in the link below of this podcast, fill out the survey, help shape the content that you want to be seeing and experiencing on this podcast, then you will get access to that insight vault where you can essentially operate with a too long, didn't listen, what's the topic, let me get the insights I'm looking for, that's there for you. Ladies and gentlemen, without further ado, talking about insights, let's get into those with Lars. He's got plenty of them. Enjoy the episode. Welcome to the Founder Files, the podcast that's like eavesdropping on a conversation with a successful entrepreneur over a fireside chat. Join me, Cameron Coots, through this unique experience of unfiltered stories and insights from scaling founders around the globe as they share their ups, downs, and everything in between. Lars, welcome to the show. It's good to have you on the Founder Files. You're someone that I've been scouting for a while to have a chat with and figure out about your scaling journey. So welcome. It's great to have you here.
Yeah, great to be here. Thank you for having me. Looking forward to a good chat.
So the timing is also quite interesting for me, is because, like I said, I've been scouting you for a while, but then the time that we end up getting you on the show is the same time where Pargo's like in the news quite a bit. I mean, you expanding into Egypt, you're really taking the business in terms of scaling internationally to the next level. So, I mean, that's really cool. Do you want to just chat me through about that and where Pargo's at right now?
Yeah, awesome. We indeed just announced our launch into Egypt. We have been actively operational in Egypt for a little bit longer. One of the reasons that I didn't have time for this podcast a few months ago when you kind of first approached me is that we were like in the middle of setting things up there and just very busy with that project. But yeah, we as I said, we launched and announced that launch recently. We are now in Egypt. We have about 500 pickup points up and running. We have two very large local clients in Noon and Jumia, and things are growing very nicely there, and things are picking up well. So it's an awesome milestone for us to not just launch there, but actually to start seeing the growth in this new market.
That's amazing, and I think to go and expand internationally can always be a complex activity, but to see the growth in such a short time frame means that you were clearly very prepared. I'm going to park that thought because, I mean, there's a whole lot of depth I want to get into in the Egypt expansion. But I think just for the sake of the audience, and I guess for me, I'm still trying to understand Pargo in terms of the details of the business model, but anyone on here that's been active in e-commerce and purchasing goods online will have recognized your name. And if they haven't already, they clearly still prefer bricks and mortar. So I guess, can you just chat to me about Pargo and what you really are as a business?
So yeah, Pargo is we're an e-commerce delivery business. Started obviously then here in South Africa, and then as we just discussed, are now expanded into Egypt. We are specifically using a pickup point model or pickup and drop-off model, which means that we partner with stores and we allow people to collect, return, and send parcels at these stores. So instead of getting a parcel delivered to your home, to your door, which often comes with a lot of issues and challenges, people not being at home, bad infrastructure in South Africa and the rest of Africa, bad addresses or lack of addresses is another big issue. In cities like Cairo, where there's very bad traffic and congestion, so courier drivers are often quite slow to get to people's places. So there's a whole bunch of challenges with a normal traditional door delivery, and we try and solve that through a alternative delivery model, which as I said, we deliver to a store and then allow consumers to collect from that store.
So just so I'm clear, is it stores only, or do you have other kind of collection and pickup points? I'm comparing you to probably your largest competitor in the space, at least in South Africa, is Pudo. So I'm just trying to understand the difference in model and essentially why yours works.
So we have all types of stores, but we do counters only. We don't have lockers. So we partner up with stores in South Africa, for instance. Clicks is a big partner. Petrol stations like Shell and Caltex. We partner with retail groups like Foschini Group, KPN and Mart, Mr. Price. And then we also have about 1,000 just independent, local mom and pop stores, including a lot of spaza shops in the townships. So any type of store, what we do is we go in, we train the staff there, we put in some software that people can receive and scan parcels when they come in and out. And obviously we need a bit of space. We need to make sure it's safe. We need to make sure it's secure. We need to make sure that the opening hours are good and that people, recognize the store. But if all those things are in place, basically any store can be used as a pickup point.
Awesome. And in terms of pick up, like I'm just trying to imagine being a Clicks, being a TFG, for example. So if it's within the brand, within our retail environments and our products, obviously perfect, great. Happy to have that collection point there and allow people to collect that. So is that something that's brand specific and I can only collect products that I bought from that company at that location? Is a Pargo point in a Clicks a Pargo point for any kind of product that's coming through Pargo? How does that work?
Yeah, so a Pargo point, you can collect any parcel. So the model is that we go out to all the e-commerce companies in the country. We sell this alternative model. So as an e-commerce company, on your checkout page, you can add to your standard door delivery. You just add a pickup point model. We integrate it into your checkout page. Basically gives you a little drop down with a bunch of stores or a little map with all the stores. And then as a consumer, you select your preferred one, and then we just deliver to that store. And then you can collect it. So when you go collect your parcel from, let's say, Clicks, you could collect your parcel from any of the e-commerce companies that work with us. And actually, it's not just e-commerce companies. We also have, other types of businesses, banks, telcos, insurance businesses, all types of different companies that would use the service. Any business that needs to get, hold of their users, of their consumers, of their users, students, whatever it is, they can send the parcel through the network. What's worked really well for us in the South African context is, from a consumer perspective, we see kind of 2 or 3 reasons why people use us. One is convenience. Any person out there understands and has dealt, I think, with the struggle and the challenges of having to deal with a courier, having to wait all day, go out just for 5 minutes to do some shopping, and then obviously that was exactly when the driver was in front of your door. Now you've missed it. So we all understand that challenge, right? That's really what we're trying to solve. But in the African context and South African context, there's a second big challenge we're solving, and that's actually that a lot of people live in areas like townships where even if you are at home all day, it's very challenging for the courier to deliver into your neighborhood, into your area. It's high risk, it's high cost. There's this whole bunch of extra reasons why that delivery might be missed. And that's really kind of why this model works so well. What we see across Africa and South Africa, Egypt, but in many of the countries, is that the successful first delivery rate of many of the couriers hovers somewhere around 70%. That means that on average, drivers go out in the morning with 100 parcels, 30 of those orders come back in the evening to that same warehouse. Very inefficient, as you can imagine.
A lot of waste.
Exactly. And although those courier companies would give a client the guarantee of like 2 or 3 attempts, so over 2 or 3 attempts, they eventually do deliver that parcel. But you can imagine that it's a lot of waste, it's very inefficient, and that drives up cost. Where in our model, we deliver multiple parcels into one drop, and we have 100% delivery rate on that first attempt. So in Pargo's world, instead of having 100 parcels going to 100 different addresses, of which only 70 are successful, we go with 100 parcels to maybe 25 different addresses, of which 100% is successful. So that driver is way more efficient. The whole process is much quicker. He has capacity to maybe go and do a second run in the afternoon. So you can increase efficiency, decrease cost, and obviously that brings down eventually the cost for the end user, making it just a much easier way to get parcels delivered to their neighborhood.
Yeah. So that the efficiency of that, I mean, there's 2 points of obviously value that's clear. Is one, it's driving down delivery costs and time, but also improving customer experience. And so I'm trying to understand here who's the target customer now, and also how has that changed from the beginning, right? So it's like, so obviously, is it the courier, is it the logistics company? Are we talking directly to the retailer? And I mean, I guess I'm going to double barrel this question with another complex question on top of it. I was still trying to wrap my head around the retail space, because I mean, at scale and a network obviously makes sense, but I can imagine it was quite challenging from the get-go to go into a Clicks and be like, hey, can I put a Pargo collection point in here? And it's like, oh, for our stuff, cool. No, for everyone's stuff. And it's like, but we're not that's not what we do. That's not our business. So like, I think that's something I really want to know is like, how did you, because that's one of the situations, almost like a marketplace business in the same challenges. Like you need vendors to have customers, but you need customers to get vendors. And it's like, you kind of need scale. Otherwise it's like, why would I have my competition's products in this environment? And I imagine a great value proposition for this is, do you actually want more foot traffic directly in your store? But besides that, I just really want to wrap my head around who's the customer? How did you pull off convincing these large businesses to have anyone's goods coming through their store?
So the 4 stakeholders in our platform that we deal with is the client. So our client is the e-commerce company, the business that is selling the parcel. It's the courier business. We're not a logistics company ourselves. We build this platform and we integrate different courier companies to do the parcel deliveries. It's the pickup point. So that's the store where you can collect the parcel from. And it's the consumer, obviously the person ordering the goods online and eventually collecting the parcel. So our model is a B2B2C model. But the e-commerce business or the sender of the parcels is typically the e-commerce business. And that's our client. That's the one that pays us. You're right. It was like when we started the company, it was a challenge. We had to go out and find a network of pickup points. Caltex was the first company that came on board, but it took us a while to get there. And on the other side, we had to find clients, right? We had to go and find e-commerce companies who wanted to use us. But One Day Only was one of the first businesses there that signed up. But it took a while. Obviously, as you said, you have to kind of have that chicken egg dilemma. What comes first? But the reason we eventually did well was that, or that we eventually succeeded, is that it's the foot traffic. So the stores really love this model because every customer that collects a parcel is an opportunity to do an upsell. We've actually done quite some research around that, and we found that about 30 to 50% of customers that collect a parcel combine that with an in-store purchase. So as a pickup point, it's very lucrative to get these extra foot traffic, extra foot forward to your store, because obviously you're making upsells. Another reason why we were in those early days in 2015 when we started the company, we were successful, is that my background is in e-commerce. I also explain this whole thing always about e-commerce, but actually the first clients who came on board weren't e-commerce companies. It was companies that were traditionally using the post office. And as we all know, the post office by now is almost non-existent anymore, but it's all really started going southwards back then. And there was this really big strike in 2014, just before we launched the business, where there was just no parcels being delivered because the post office was on strike. There was still these photos in the news and videos and on television of, warehouses that are just all the way to the roof full of parcels that was not being delivered. So that was a little bit of a luck for us when we started the company, that we immediately got quite a few clients coming on board that were just looking for alternatives to the post office and loved the model and started using it. And again, the reason that they could use us and maybe not a traditional courier model is that if you're using the post office, your cost per parcel is very low. Where with a traditional courier, you're sending, it's one by one by one by one, which means that the cost per parcel goes up quite a bit. So it was a really nice, in between solution in between the two, the non-working post office and the very expensive door delivery courier service, and kind of that took us off in the first year to really help us grow the business and get that early growth after launching.
Sounds like an amazing gap. Before I guess we get into the founding story and the product market fit, I mean, besides asking you for your unit economics and basically doing a due diligence with you on the podcast, are there any questions that I haven't asked you about understanding Pargo as a business?
No, I think that's pretty much it.
Cool.
Maybe returns. Maybe I should just
talk to me about returns. I think that's obviously going to be always a big spot in e-commerce.
Yeah, so there's basically 3 things you can do at the pickup point right now. It's obviously collect your parcel, which is for us the biggest part. You buy online, you collect in store. But another very big pain point that we solve is returns. We all know, you buy something online, it's not the right size, it's not the right color, something's wrong with your parcel, you want to get it back. Actually, the return leg and the return reverse logistics is by far the biggest nightmare and headache for everybody in the industry, for couriers, for e-commerce businesses, and for consumers. If a delivery already comes with its challenges, you can imagine that a return is even worse. You typically, if you don't use a pickup point and just use a normal door delivery, you've maybe used your office address as the address. You now have gone home with your product. You come home, you find out it's the wrong product. You've now put the return into the system of your e-commerce client, of your e-commerce company, and they come and collect it from your office, but your parcel's still at home. Right? So these kind of things happen all the time, where we have a very, very simple and sophisticated solution where you can just go to any of the stores, drop it off, it gets scanned in there. Most of the clients straight away give you your refund. So at the moment you drop it off, you get your refund, and we then make sure that parcel goes back to the client's warehouse and is recovered. So I think especially on the returns, we're seeing it work very well.
On that, would I have had to have collected this from a cargo collection point in order to return it through a Pargo point?
No. So the two things are separate from each other. So any order that goes out and has to be returned can come back through us. In fact, if you look at, and South Africa is not there yet 100%, but we're seeing more and more of our clients moving towards stopping door or courier returns altogether. If you look in Europe and the US, most of the big e-commerce companies won't even offer that option anymore. If you want to return something, they'll still give you a free return. They'll still make it, as simple as possible, but you have to then drop it off at a pickup point business, just to make that whole process a bit easier. Obviously, also again from a cost perspective, if multiple customers can drop off at one store and we can then consolidate on the way back, it just makes that return leg a bit more affordable for the client. And then what we've done in the return solution is, one of the challenges was labeling in the beginning. When we initially launched this, you as a customer had to print a label to then drop it off. We've now completely automated that and made it seamless, so there's no more printing needed. Every store has a label. So you just go into the store, you give your parcel, and everything else is done for you there. So it's a really seamless, simple solution, and it's starting to grow and starting to being picked up by most of the big e-commerce players.
Nice, Lars. That's great. Thanks for giving the context. So I guess, talk to me about the founding story. I mean, obviously you've got a Dutch accent, so you will assume you're from the Netherlands, right? So talk to me about how you ended up starting as such a big player in the e-commerce space in South Africa, of all places.
Yeah, so indeed, I'm Dutch from the Netherlands. Back in 2012, Derek, my co-founder, and I moved to Cape Town. We were back then both working for Groupon back in the Netherlands. For the people that don't remember Groupon was a very fast-growing daily deal company. You could buy all types of stuff for half price. And their kind of expansion was being fueled by Rocket Internet, so the German investment business that basically just like hyperscaled businesses across the world. So when Groupon was acquired in South Africa, I think you had Daniel Brasco on the podcast not too long ago. He told that story.
Shout out to Dan.
It's a great story. Jarek and I came to South Africa to kind of help align the local business to international best practices. We arrived here with hopes and dreams of scaling e-commerce across first South Africa and then later the continent. And then realized, two things. On a professional level, just the challenges of e-commerce delivery. And then obviously that triggered the idea for Pargo. And on the personal note, just how fantastic city Cape Town is and that we definitely didn't want to go home yet. So those two things came together and kind of basically triggered the idea to start Pargo, which we then launched in 2015. Really from experiencing a problem firsthand in this space is basically what triggered the idea to eventually launch the company and start Pargo.
Nice. I've never done this once before, but I've sparked my curiosity now to think about it. But obviously, you're saying Cape Town's a beautiful city. I can see that you've got some kind of view and crane in the background. So I'm assuming in the city of Cape Town. Do you mind giving the laptop a bit of a twist so we can see like the context that you're in? I'm assuming you're at the office, but what does your environment look like?
I mean, I can show you.
Stable Mountain?
Yeah. We've got quite a few international listeners and viewers of this podcast. Anyone looking at that you don't know what Cape Town's all about, have a look at that view. It's a good reason to come here, and it's the whole reason why Lars stayed.
Exactly.
Thanks for sharing that. So cool, Lars. So talk to me about, so obviously you were playing in the space already. You're in e-commerce and logistics there, like you had some pretty unique insights into the space. And then you mentioned that first year or so being that great gap in the market that you found, specifically at the decline of the post office. What did product market fit look like for your business? How did you know that you had it?
Well, so I think, as I said, we started the business, launched in 2015. That just been the strike at the post office. We got an old-fashioned catalog bookseller, like what do you call them? These typical post service. So you tell them every month I want this book, and they'll send them through the post to you. I forget the name of those businesses. Part of Media 24, very very old fashioned kind of business. Anyway, they had hundreds of thousands of users throughout South Africa. Post office was not working for them. We jumped into that gap and started growing. So that first year, all we were doing, it was literally Derek and I, and we started building a small team. I think we had maybe 10 people. At the end of that year was building the network. So we would just go out and open up more pickup points and more pickup points and more pickup points. And because we had a client that kind of guaranteed volumes to these stores, we could build that company that first year quite nicely. So we got to about 500 pickup points that first year. We did over 100,000 orders, which then was like great for us. We're super happy with that. But most importantly, we picked up that the consumers were loving it. Again, a bit of an advantage is that you are being compared to the post office. So it's like easy, I guess, to delight customers. But we were also spending a lot of time on that. We were every week, at least, but mostly like 2 times a week, we would go to these stores, we'd check up with them. How is it going? What can we do better? How can this work? And they loved it. So the stores were super happy because they got, that extra foot traffic. The consumers were super happy because they had now a way easier, better way in their minds to get their parcels compared to the post office. And the clients were super happy because they had an affordable way to send the parcels. So that was a really great first year. Then unfortunately, I still remember this, like it was, year one done, Christmas holiday started in December, and we had actually only just, we had something like 10% of the volumes of this client. They were still doing 90% through the post office. So like most areas were still being done not by us. So, we're like, okay, year 2 now, we're going to grab that night. We're going to grab all the volumes. We're going to get more clients. And then we got like literally a call on the first day back from Christmas holidays telling us that the higher ups had decided, like, after 35 years, this model just doesn't work anymore. Like e-commerce is here, people are buying online. Why are we still trying this kind of post-order service book? The book service doesn't make sense. So anyway, biggest clients falls away. We went from 100,000 orders per year, let's say, I forget how many per day or per month, but to 0. We literally went. So we're like, okay, present. Shit, what do we do now, right? Luckily, we had onboarded a few e-commerce clients. I had already mentioned One Day Only. Anyway, we eventually made it through that year, but we made it through that year. And in that second year, as we were kind of going through those harder times, we onboarded a few other e-commerce players. One, as I said, one only. The other one was Spree. I forget the other ones, but a few smaller ones. But just enough to get us through that. And then on the back of that, we could finally raise a bit of capital, and that was when we really started building the company. So in terms of finding product market fit, honestly, one of the challenges I would say, and I think it says also something about us, is this product market fit is not a term I'd ever heard of back then. It was not something we were thinking about. In general, the whole ecosystem was still just being built. There was not yet Y Combinator, something I'd never heard of. Series A, Series B, all this, so everything that is now super normal for everyone, all that stuff didn't really exist in South Africa. I would say it just started back then. There was no real venture capital. There was no real playbook of I guess the typical Silicon Valley, Y Combinator, or whatever you want to call it, kind of way of growing businesses, from C to Series A to Series B, etc. So we were just doing what we thought was good. And for us, that was, we need to create value for the users. We need to make a solution that is better and cheaper than what is out there. So that was all we were trying to do every day. And clearly we're quite successful at that. We also spent a lot of time on the technology, making sure that on the tech part of the business was very good, very strong. I think that's also a good part in the beginning, like a part of the success in the beginning. Obviously, make sure in the logistics world back then, especially even still today, they're not per se known for their seamless technology, for their easy to use systems. Right, it's all quite archaic. So we could make quite a bit of a difference there. And one of the things I think we did quite well is that in the logistics world as well, there's a lot of, it's very technical. It's not easy logistics, especially in South Africa. But what a lot of companies do, up to the biggest ones, DHLs, FedExes globally, is they use the internal terminology towards the consumer. So that's one of the things that we didn't come out of the logistics world at all. We didn't understand it. So half the time we didn't understand what these guys were talking about. And we was like, okay, let's just try to simple this. If we don't understand it, then I'm sure that the customers, the consumers also don't understand it. Let's just make it really easy to understand. So if there's a process of 30 steps from picking up a parcel to going to a warehouse, to going to another city, to doing the last, let's just put that into 5 steps, right? Collected, en route, delivered, collected or returned, right? So we try to really simplify everything in that whole supply chain. And I think that's, or kind of a few of the things why we, in those early days, started picking up and started doing well. And of course, again, we were solving a real problem. I think that's number one reason why we were able to grow. Looking back, I would say we were quite early. So, your question is when do we realize we had product market fit? On the one hand, I can say almost from day one, we could feel it, right? As I said, we opened up the first 14 pickup points we launched with 14 pickup points in the Western Cape. And within 3 weeks, we had done over 1,000 orders. We never expected that. Wow. And every pickup point was super happy and super. So from day one, we could see, hey, this thing is working. We could scale it or grow it from day one. And we continue doing that. So the first 5 years or so, we almost doubled the company every year, and started going. But I would say from product market fit, not just product market fit, but also market readiness was 2020. And that's when COVID hit, right? So COVID hit in 2020. I guess as a business, you were either one of two. It was one of the best things that could happen to you or one of the worst things that could happen to you. We literally did not know that up front. We, like everybody else, went into this 5-week lockdown that, the very high, the level 5 lockdown. The president just said, guys, you're not allowed out of your homes. You have to stay at home. And I still remember it was Sunday evening, the president did his first speech. That Sunday evening at 10, 11 o'clock, I started getting WhatsApps from companies, from prospects, from businesses that I had been hounding for months or sometimes even years, trying to convince them to use us. Yes, sure, Lars, maybe, and all of a sudden, WhatsApp, Lars, can we have a call tomorrow? We need your services. Everything's going to be online. And that's 2020 was really a bumpy year for us. E-commerce took off. We had extreme growth. And I would say that's really when I think the company kind of established itself as, okay, now there's a real thing here.
Yeah, I mean, COVID accelerated everything e-commerce worldwide. One thing that caught my curiosity, is that you said the word scale, but then quickly corrected yourself to grow instead. For you, what's the difference between those terms?
For me, like, I would say you start a company first, try to create that product market fit, try to find some way, like, you have an MVP, does it work? Can we see customers use it? Are they happy to use it? If you get to that point where customers are happy to pay for your services, you want to start growing it. We've made the mistake to use that word scale too early. For me, scale is really that next step. It's like, okay, now, like, the future for Pargo is scaling it. This is when you go from being a nice, good little business in South Africa to becoming like a global player. That I would say is really when you start scaling it, really taking it to the next level, really 10xing it again after I've been doing this already for so many years. So almost I feel like internally we use that word of scaling and the focus on scaling in those early days a little bit too much, where I think we're actually just still hacking it and still growing it, and looking back, should have probably kept on doing that a bit longer, where we were already trying to really establish very, very professional frameworks. And look, we did it, and the positive side of that is that we now have that. There's a very robust internal systems, very robust technology, very robust data team, very robust operational support team. Like, it's all really good. But some of those things, looking back, we might have done a little bit too early, and I think we should have maybe could have used the same resources and focus on growing the company even faster. But yeah, that's with hindsight. I think we have kind of made a little bit of a change there again, where we are actually now, a few years later, kind of have taken a few steps back and are a bit back in that mode of just grow the business, not at all costs, right? We are profitability and unit economics are all very, very good for us, so that's definitely there. But the mindset has been a little bit more about just like how we used to do it in the old days.
Interesting. I think that's, again, it's like, but whether it's product market fit, there's no science to it. But I mean, the growth and scaling points, these are quite abstract concepts, and it really always depends on the business. But I guess the one way I like to think about the scaling journey, because it's not a point, it's a scaling journey, is that it kind of starts from product market fit, if you will, but if done theoretically and according to a textbook. After that, it's about putting the foundations in for scale, right? So it's like, what's the model where, from a scalability perspective, is how do we replicate this model within new markets and environments? And again, like that model in a new market doesn't necessarily mean a new location. It might just mean a different need. And it's an evolution of that. And that's how I think about it. But I think the point is the scale can't happen without having, these really robust systems, processes, structures within the company, because, otherwise you're just basically starting a startup in another place instead of scaling a business. And like, without those systems, I don't think you would have been able to go to Egypt and immediately out the gate there's 500 locations, right? There would be this whole 100%. Figuring out thing that needs to happen without that. So, and I think, again, it just goes to show is that you became a dominant player within the core market that you first selected, and then from there then decided to go expand internationally. And I know from also our conversation that we had offline preparing for that, it wasn't exactly that smooth and simple. There was a couple like mistakes and changes and things that happened in between, which I can't wait to get into. But I think now this whole Egypt topic, right? Obviously, it's super exciting. So what everyone's talking about in the news right now, it's probably to a point where it's like you've been doing it for months, maybe borderline at the point of tired of talking about it now. But I'm going to probe a little bit further and actually get a little bit deeper. 2 questions. Why the decision to expand internationally in the first place? All right. I know that might sound like in many people it's an obvious or stupid one, but there's many different ways to grow a company. Why international expansion? And secondly, why Egypt?
Yeah. So why international expansion? To touch that one first. From the get-go, from the day we started the company, our mission was like, we had a feeling that this problem we're solving, which is again inefficient, inconvenient, expensive delivery, is big and exists all across the African continent. So from the get-go, we were like, okay, this model could probably work really well, not just in South Africa, but in multiple countries across Africa. Our mission from day one has been creating accessible delivery, but access for anybody in Africa. It's big on the wall from day one. decision I guess you have as a business is, you start something. I think that's one of the things we've done well is we took a niche. We took, e-commerce delivery, and then within e-commerce delivery, the pick-up point model. So it's quite niche, quite small, but we got that niche really well, right? I would say we are one of the, if not the market leader in South Africa, and have all the big e-commerce companies now using us as their click and collect service. The challenge, though, is that you take this niche, you get really well, but at some point, it's like, where else do you grow? Now, obviously, there is always more growth in the country, which we are growing, but the growth comes down a bit. It's not more 100% year on year. So then you have to choose. Do we, I was forget, is it horizontal, vertical, but do you start adding more services, and do you start thinking, okay, we have this quite amazing client base, all the top players in South Africa are working with us, what else can we sell them? Or do we differentiate on product? Do we start adding more products? Or do we take the product that we have, make that even better, and start differentiating by going into multiple markets? Do we go into new countries? We made mistakes. One of the big mistakes is that we said, let's do both. Let's go into new markets and let's differentiate on product. But let's do the new product thing first. Also a little bit because of COVID, we couldn't really expand. We were actually planning an expansion just before COVID, and then COVID happened, like all those plans kind of fell away. So COVID happened, we couldn't expand. And another thing happened is that, as I said, I got those calls that evening that the president said there's going to be a lockdown. Clients started calling me and asking me anything logistics related, like, can you guys do that for us? And, being entrepreneurial and getting these opportunities, we kind of made the mistake, I guess, by just saying yes to everybody. Sure, yes, why not, right? Revenue, like, love it. But a lot of the things we said yes to were not strategic and were just not easy to defend later down the line when the dust settled, COVID ended, and these companies had a bit more time to actually,
Can you give an example?
These services. An example is that a lot of the companies are integrated into Pargo. We're not a courier business. We do the pick-up point model, but we have all these couriers integrated to us. So end of the day, door deliveries, what we don't, really, it's not really our bread and butter. It's not what we do, is still a big part of what the market needs. So they were like, can you guys just do door deliveries for me? Well, yeah, of course, we have the couriers integrated. We'll do that for you. But there's nothing in that world that we were doing there that was very strategic. You're just on-selling a service from a courier. Yes, the technology is nice and things like that, but there's a margin that we need to make. So we just took the courier rate and put some margin on top of it. All of a sudden, we're not the cheapest anymore. All the things that is within our mission, be the cheapest, have the biggest reach, and be the most convenient, just didn't really work there anymore. So in that specific space, we saw then eventually some of these big clients losing them again because losing that service to these clients again because it just didn't work for them. When COVID kind of then ended, 2022-ish, we started saying, okay, let's also look at this expansion opportunity. So we hired an expansion team, some very smart people, and started looking across the continent where we could expand to. And as I think most people that understand the African e-commerce and digital and tech space a little bit, it's like it comes down to about 5-6 countries, right? It's South Africa, Egypt, Kenya, Nigeria, Ghana, maybe Morocco, and that's about it, right? Most of the other countries, there is not real big e-commerce there. So we looked at those 5-6 countries. Initially, we were looking at 3 elements: the size of the market, the cost of entry, and the ease of doing business in the market. And initially, we were going to go to Kenya because all the other markets, cash is a big part, or in all these markets, cash is a big part of society. They're all very cash-driven economies, Egypt specifically. But Kenya has the mobile money, Pesa. So in Kenya, we could integrate with Pesa and make that whole cash component disappear, which is that this country scored really high on our ratings. But the size of the market was actually quite small. So eventually, a board member said, just promise me one thing, please just go to Cairo for a week. And if you come back and you still want to go to Kenya, do it, but just do that. So I went to Cairo together with my team, and we were blown away by that week. The size of e-commerce, there was just this war going on between Amazon and Jumia. So everywhere you would look, there would be marketing and commercials for these two companies. So like it was in your face, like we're here. The entrepreneurs that we met, like the highest level I've seen in the continent. The energy in Cairo of like just how these guys are, meeting you, open to meet. It's just amazing. So we're like, okay, looked at the numbers again, said, okay, if we just solve for that cash problem, how would Egypt score? And it was like by far the best. It's bigger in e-commerce than South Africa, and everybody else is much smaller. So anyway, it ended up saying, okay, this actually makes more sense. Let's go to Egypt, but we need to solve for that cash problem. So we eventually launched in Egypt in 2023, so last year, with a small pilot, but had to in those first kind of 6 months or so, had to come up with a payment solution so that people could pay cash at the stores and for their parcel, and that we could get that cash back to the clients. And so we found a solution for that. We now have that live. And yeah, at the beginning of this year, we started growing the business there. And now all of a sudden, we could cater for every order, every consumer, because 80% again is cash. So we could now manage all of that. So yeah, that's kind of why Egypt eventually, end of the day, just like the most developed e-commerce market and one of the most exciting countries, 100 million, more than 100 million people living there, quickly digitizing.
Knows how many you are.
Yeah, very, very big, very, very big opportunity. So yeah.
So Lars, there's so much that you said that I want to dive a little bit deeper into. And I actually want to go a couple of steps back to what you were talking about during COVID and these ideas that were coming your way from your clients. And the reason why this is also going to be foundational towards my understanding of digging a bit deeper into the geographic expansion. But I think, what is the core need that you're fulfilling for e-commerce? Is it driving down delivery costs?
It's three things, but it's cost and convenience, right? If we can bring down delivery cost and we can make that delivery a little bit more convenient, because a certain consumer lives in an area where normal delivery is just challenging. And the root cause for both is the same. It's that most times drivers, or not most times, 30% of the time drivers are missing you, you're not at home, brings up costs and decreases your convenience, your experience. Get those two things right, and then that eventually we say that it results in access. Because if we have those pickup points in the right places at the right cost and the right experience, all of a sudden as an e-commerce company, you can access parts of the population that you couldn't previously. So it's kind of the three things, but cost is a very big part of it.
So the reason why I asked that is because I'm trying to, obviously the understanding that I have around the opportunities that you said, I could get into growth strategy theory, you mentioned the vertical versus horizontal, but the point there around the ideas that you had in essentially just charging a margin on the courier services, it's again that the need there, from my understanding, is just not the core need that is driving down cost and increasing convenience to consumer. Is because what you are creating is greater convenience for the e-commerce business in terms of what courier to go with. And that's a different need in terms of what I'm understanding. That's also something that almost overlaps more with like where Parcel Ninja plays, is around the fact that they've built this amazing software in terms of, it's like, if you want to like lower your ability to choose couriers,
exactly,
like it's a lot more affordable to do that, and like there's better solutions that can help you with that. So it kind of makes sense that when you divert away from the core need that you're addressing, it's a different business that you're now building in terms of addressing that. It might be so similar that it's almost like indistinguishable because of where it is, but it like the operations and the key strengths and differentiators to be able to address that need properly is so much there. And the reason why I say that, because I'm glad I got that clarity now. Because same thing in Cairo, almost even more so, is like like you mentioned there, is like how much chaos it is on the roads for courier companies. Just from a convenience perspective, they're getting e-commerce thrown at them left, right, and center. Is it that the need for addressing that combination of both driving down delivery costs but also improving convenience to consumer is even higher. And so now, I love the fact that I had to form a payment solution, because it sounds like, wait, hold on, you're like in the logistics, e-commerce, like collection space, but now you're a fintech as well. And the funny thing is like, because the core need has got nothing to do with finance. That's a problem that just had to be unlocked in order to create access towards what that main need is that you're solving, which I find super fascinating.
Yeah.
Did I get that right? Did that all make sense?
No, that's exactly right. And I think that's exactly right. And especially that first part about, like companies were with their back to the wall when COVID happened. So they just went out and I guess asked anybody to help them. We said yes. But as you said, we were doing things that were just not our specialty. And the challenge on that is like it's not just that eventually over time, it just wasn't, it's not just that it wasn't successful. It's not just like, okay, we tried something, it wasn't successful. No, it was because we started doing that, we didn't have focus. All of a sudden, because the requests you get from the clients are going to be things that maybe, as you said, a Parcel Ninja or a Bobgo, a Bob Group here in South Africa, or, I don't know, there's others, they focus on that. And they're probably quite good at solving those problems about managing, aggregating couriers, doing where ours was like, now we have to focus on that as well, but we're still focusing on our core product. In our core product, there's different core service, which is the pick-up point. We have different services there. It's like it just became too much, and it just meant that there was just like a lack of focus. So the domino effect of that was that it just started the whole, like, it came through the whole company. Like, people could not really say this is what we do. So we stopped it. We said, let's stop that completely. Let's go back to what we are good at, what we're known for, and continue. Well, let's be the best we can be in that space. And as I said, and then on the back of that, start taking that into multiple markets. And that's where we are today. That's the vision, is that we are the lead. We want to be the leading pick-up point delivery business across the region. We want to go into multiple markets. We want to nail that. We want to get that completely right. Understand that. We understand that already, I think, very well. Understand it even better. And do that one thing very, very well. And on the back of that, we can build an amazing big company and be very successful.
Yeah, and so the whole point of why we do this podcast is to give the listeners, practical insights from people that have been there before to avoid years of trial and error and scaling their own business. And what I'm thinking about now is just this pointer on focus, because it can be quite an abstract concept, especially until you realize what focus actually means versus what it means to be unfocused, because it's so like, and the antithesis of entrepreneurial nature, to say a customer's phoning me with a new problem that they're willing to give me money for, and you want me to you want me to say no, like that, that's not in me to be able to do that, right? So from a point of focus, I actually want to just dive deeper in terms of what actually happened to your business when you weren't focused, when you were saying yes. What were the consequences? What were the issues that you had in your business? Like what happened to profitability and scale and people? It's like what actually happened? Like, now, if you had to do a retro fully looking at this, is like what was it like when you were first receiving these calls from these people and you were like, yes? I imagine it was exciting.
Yeah, so obviously it was exciting. We built a solution. We could do it as well, right? So we could serve them, but with limitations. I think the first mistake we made is that we didn't say that, right? We did the whole say yes first and then figure out how you do it later kind of thing. While what we should have just done is like, yes, we can do it, but this is not our core. It means we'll do it, and but the way we're doing it is with ABC kind of, or we're doing it ABC, but it means that certain things that you might have from others won't be there. You still want to use it? Fair enough. So yes, it was exciting. We started doing it, but I think, again, to answer your question about what was the knock-on effect for the whole team is, those clients are not, they do have requests. They are going to say, hey, like, I don't have examples now, but can you fix this for me? Can you build that for me on the system with a door delivery or with this kind of thing, or in this region, I need that. And that was something we never had before.
Customer queries and requests and inquiries, and it's like, okay, I got to figure that out now.
Yeah, exactly. And you get those customer queries on your core product. That's a small improvement you make every time on your core product, right? That's cool. That's okay, cool.
All this client asked for this.
Hey, that's exactly. And that's really, we didn't think about that. Really good question from this client. Let's build it. And then every other client can use that as well. Now, the client is asking you for a solution, solve X for me. Nobody else is doing that, just this one client. And we're making some nice money on it. But now we need to get the whole product and engineering team, but somebody in the product and engineering team to start building and fixing this little thing for this client. But, those things start stacking up. It's one little thing here, one little thing there. And before you know it, you go through a whole year of fixing little things on kind of random requests on non-core products, while your actual core product hasn't developed as much, is not going the same route, right? So that's the knock-on effect. It's like just people are not building, not spending their time on the things they should be spending their time on. So the only way you can solve that eventually, what really it is, completely stop it. Just like, okay, this is not core. Anything that's not core, we're not doing. Obviously, that came with a bit of a financial hit, a bit of financial knock, but it worked. So that year was tough, but we started picking up again, and we started seeing growth, and we started seeing growth in the core product, and we started seeing all the good things that we saw before started coming back again. And that's obviously why we did it, and it just worked really well. And since then, it's just like, yeah, back to focus. Everybody knows what we're about. It's about identity in the day. It's like we lost our identity a bit, and we recalibrated that identity. This is about 2 years ago. We said, okay, 2022 was that bad year. 2023, you're like, okay, guys, let's go back to the core. What is our mission? Who are we? What are we about? Let's double down on that, and let's make that product, that core service shit hot. Let's make sure that we are even better than we are now. Let's not get complacent and think that we're already there. We're not there by far. So that's what I think was the learning, and the mistake we made, and then how we corrected that mistake and saw the growth coming out of that eventually.
But we didn't know each other 2 years ago, because that's exactly what Metavolve helps clients go through, is that transition and that focus. I do want to go deeper, because this is such a critical point that happens so often. And
sure, I mean, I can give you some examples. An example is the team, right? So we started, especially in the when you start doing everything for everybody, and you start becoming much wider and much bigger than, like, your focus is not on one or two specific things, but on everything. Started hiring people, right? So we had raised money, and we started hiring. So we started hiring a whole bunch of different skill sets. A lot of people in product, a lot of people in engineering. Expensive, right? This is like, for us, this is our main cost is basically staff, people as a technology company, and I guess marketing. So all of a sudden we just started, the team became bigger and bigger and bigger and bigger. But with people that were eventually not working on, with hindsight, not working on the things that we should have been working on. So that investment, I don't think was wrong. Those people were great. It's nothing to do with those people. They were fantastic people. But they were, with hindsight, not the people we needed, because
the strategy was wrong.
Exactly.
Yeah, that makes perfect. Okay, so but even on that, I mean, like, because this is, again, it's very common, and it happens all the time, where this decision to grow in this way, leads to a situation of some kind or another where it's actually, what, like you said, we've lost our sense of identity. Let's scrap that. Let's go back to the core. What I want to understand is, why not double down? Because look, the nature of whatever is being built is, it's like this now becomes like two business units, and from there's got the core one that can grow. There's this new offering that you can do. Your attention's distributed, sure, but it's like you say it as if there was this pathway. It's either the point of we double down on actually figuring out what this is, we actually scrap the whole one together. Why didn't you go the other way?
We could have. I think there's no right or wrong answer. Our reasoning was, we went back to, what is the problem we're really trying to solve? And at the end of the day, the problem we're trying to solve is door delivery. Like, it's expensive, it's problematic, it doesn't always work. We should become that alternative to that door delivery. We should now also be doing door delivery. Having said that, we still have some clients that want to do door delivery with us. It's still like the most common thing, don't get me wrong. But it's like, let's go back to that. Back to what is the initial problem we're trying to solve? What is our mission? And let's double down on that. The second part is that the market, what we are building today, we believe is, solving a real problem, first of all. And because of that, super useful and valuable in the future in the African context. So what we're trying to do is to really be a key enabler for e-commerce growth in Africa. So again, it's like, okay, we need to then be in Africa. We need to take this model and start going to multiple markets. And part of the problem that I guess doing e-commerce in Africa and doing e-commerce logistics in Africa that everybody in the industry has to deal with is that compared to, globally, it is all still quite small. So in that niche that we're doing, we had already grown quite nicely. There were some other very big players already doing the alternative, right? The other stuff that kind of we saw as distraction. But there's nobody doing what we're doing in the rest of Africa. So again, it comes back to why let's rather than spend our time and energy in going into Egypt, for instance, right? What we've now done. So yeah, I think that's fine.
And was that a bit of a mindset shift? Because I think it's, again, what I think South Africans are extremely guilty of, and as Zach George puts it well, is like no one thinks past the Limpopo border. So what naturally happens in South Africa is we think about like how other routes to grow is fulfilling other needs, but within the South African market. Like, I think one thing that we are notoriously quite bad at is saying, like, how do we solve the same need in a different place? And it's like, that's just like, what that unlocks from a mindset perspective is just with the scale of what this can be is so different to then if you just think about, okay, let me go what's convenient to grow in because that's what the problems are being thrown at me versus like, how do we take what we've built here and, 10 exits outside of the borders?
Well, we're not South African, so maybe that helps.
Yeah, that helps.
Different mindset. But yes, I mean, that is something I pick up a lot. I think in South Africa, there's a lot of skepticism around the rest of Africa. I think partly because some of the biggest South African companies have been unsuccessful or have burnt a lot of money and time and energy in trying to do this. Time will tell if we are going to be one of those companies or not. Hopefully things keep on going very well in Egypt and the rest of the region. But for us, as I said earlier, it's always been the goal since day one. It's again, the problem we're trying to solve is even bigger in many of the countries we want to go into in the future. And actually, another thing that did help, and that's also something that we can't underestimate, underplay, downplay, is that, as I said, COVID accelerated e-commerce. So although we've been around since 2015 in South Africa, I'm pretty sure if you ask somebody in 10 or 15 years about e-commerce in South Africa, that for a lot of people that didn't start in 2010, 11, 12 when Takealot was founded, but they'll start only counting it from 2020. So if you look at it that way, we just began. And one of the things we realized, or what we've noticed is that since then, all for the first time, and it didn't exist 5 years ago, is global e-commerce players starting to look at Africa as a region. So obviously Jumia has been across Africa for a while, but Amazon coming into South Africa and Amazon, potentially having plans to go into other markets. Amazon is in South Africa and Egypt, right? That's really one of the reasons we're also in those two countries. We work with Amazon in South Africa. One of our big clients in Egypt is Noon. Noon is a regional player in the Middle East. So they're in multiple countries around there. Obviously, our Chinese, the big Chinese companies, Temu, Shein, and all those guys looking at multiple markets. So what it also means is that in terms of your market expansion and going to multiple markets, what we plan and hope to do is ideas that we're not just going to go into new markets from zero. The idea is that we're going to use these anchor clients that we work with to open up new markets. We didn't do that in Egypt. We had to start from zero. But if we would go to the third country, we would do that based on a client. We would ask one of the big clients, or they would ask us, say, okay, which other markets could this model work for you? And hopefully get a combination of some of those clients, so that when we then launched it in the third market, we actually from day one have that anchor client that worked with us, so that we can start it from like revenue generating and good volumes from day one.
Yeah, I think that makes a lot of sense for me, because it's also, again, it's so easy to look at this from a bird's eye point of view and from the outside and through hindsight, but it's the kind of patience to work your way through a lot of the smaller e-commerce players, getting up to the larger ones with it, but then going to the multinationals, because the point there is even being able to unlock Amazon is now it's like you've got a route to market in all these different geographies. And the thing is, it's like you're going to have the same problem now if you're going to go Alibaba, for example. It's like, how is it that we find like the first kind of country that we're going to go to there to be able to unlock that and move that forward? And it's all, that's where the complexity comes in, and it's hard to land it for the first time, but then after that, you can kind of grow and scale within that same client moving forward.
And then if we can be in multiple countries and be that gateway into Africa. If we can, for e-commerce delivery, of course, like that's the vision, that's the goal. That's we're in 2 countries now, but in the coming 5 to 10 years, we want to be in about 7 to 9 countries, and through that, those 7 to 9 countries for all those big players. And according to our numbers, just those 5 to 10 big players, and that's not even looking at the local players in each of those countries. Already, you can build an amazing business on the back of that. And we're getting now to a space that's starting to happen. So that's like the business is now evolving into being what, like we're getting to that time.
Yeah, Lars, I really enjoy your story, because it's also that focus on that core business model, that core scalability, being able to unlock that into different markets. Again, what I see so many entrepreneurs being guilty of is that they'll do that first and do it the first time, and then they get bored, and then they're like, let me exit and let me go do something else. And it's like, guys, do you have any idea what you were sitting on if you just powered through? Because it's like what you've now have is, it's like we've just started, actually, right? And even to the point where you're saying is like these 5 to 7 countries, 9 players. The quote that it reminded me of is that, we tend to overestimate what we can achieve in 1 year, but underestimate what we can achieve in 10. And now it's like, cool, like those are the numbers that you have, like realistically, but in a decade, it could be like even way greater than that. And it just comes with the, determination to follow through with the core business, but also just that real, not just self-awareness as an entrepreneur, but like it's almost this organizational self-awareness as a business, looking at itself in terms of like, what are like that identity points. It's like, what are we actually? And without that at its core, there's no way you can be able to grow and scale as much as you've done. And as much as you're going to continue doing.
No, I completely agree. I think, look, patience, and it is a long time. We've been doing this for 10 years almost now. Sometimes I can't even believe it's been 10 years. But yeah, patience, grit, all the cliches about entrepreneurship are very much true. But I always laugh a little bit, right? Because like I feel that's like a positive way of saying there's a thin line between grit and patience and just being stupid and crazy. Because why would you go and wait so long and go through all the kind of challenges? And that's another way of looking at it, right? It's a thin line. It's if it goes well, you look back at it and you say, yeah, no, that was amazing and well done, and the grit you guys showed was amazing. But if it doesn't go well, or if it never comes, then it's like, oh man, and I see that a lot as well. There's so many, plenty of entrepreneurs as well that are just going to continue going and going and going, and just like nothing ever happens, right? So yeah. As long as you need to get the momentum, it's right. You need to get the momentum. You need to make sure that things keep on happening, and that takes you through it. For me, at least, it's like as long as you just keep on taking one step after the other, and you start having these, keep on having these little wins. That does help.
Yeah. And on your previous point, again, it's another, I feel like I'm just regurgitating quotes at this point. But another quote that I really like is, courage is seeing something that is probably going to hurt before doing it, and doing it anyway. Stupidity is the exact same thing. And that's why life is hard.
Yeah, makes sense.
and that's entrepreneurship, basically 101. Cool. So back to the international growth and scaling now, expanding overseas. Another thing that stuck out for me from what you were saying is your international ratings. You're rating these different countries, which I find quite fascinating. And then even then, it's like even if you looked at how we solved this cash problem in Egypt, the rating for Egypt went up. Tell me about the framework that you're using. It sounds like quite a scientific process. Like how did you go about actually analyzing which countries you should go to?
We have an amazing COO now, but she was our expansion manager first, Jennifer Clark. So she kind of led this for us. And the idea we had was, if we want to go into Africa, let's do some desktop research first. Let's start from the get-go and look at all the countries. Obviously, we know that most of them are not going to be applicable. Came up with the scorecard, as I said, on the 3 elements: size of the opportunity, ease of doing business, and cost of entry. for each one of those things, we had like a whole lot of about 20 questions each, which all then could get a score. So we did that desktop research, which was a little bit of work, but
can you give me some examples of the questions from top of mind?
I mean, size of opportunity, right? So like how many people are there? How big is e-commerce in terms of dollar value? How much people have internet? How many? What's the average income of a person? So like a lot of demographic, a lot of kind of market size questions. Ease of doing business would be: are there existing couriers? Because ours is a partnership model. Can we, is there somebody already doing deliveries? Obviously, if not, then that makes it difficult. Payments, as I said, if it's all cash, that would score lower. Regulatory things like how is the country set up? How is the government set up? How do you need licenses? Like all that kind of stuff. And that's more cost of entry. Like what does it mean to set up a business in the country? What is it, And so for each, I forget.
Sounds pretty comprehensive.
But all those kind of things. And then, as I said, did that for about 17 countries. But all that data is online, so we could get through this quite quickly. We just got somebody to eventually fill all that stuff in, made the rating, and then got like top 5, and gave us like a good framework to see where we wanted to be. And then that was the kind of quantitative research we did. We also found it very important to do qualitative research. So we actually went to each one of these countries, the top 5, so Nigeria, Kenya, and Egypt. Top 3. I mean, we chose those 3. So we went there, went there for about a week, had a whole lot of discussions with, potential clients, potential courier partners, potential pick-up point partners, a lot of other entrepreneurs, to really get a feel of the country, get a feel of the ecosystem, and eventually use those 2 things to make the decision.
In terms of this framework, is there like any resource that someone can go and look at online? Was there any specific spot? I mean, you said your CEO put this together, so I don't know if there's anything that people can go and look at and find, or any just like hints for people to look at something themselves.
No, I don't think so. I think it's literally we just created this. I think she created this from just out of herself.
Yeah. Well, I also just love the rigor that you went into with that, because again, it's like it doesn't matter if you are Standard Bank or Woolworths. Actually, is a very good example in Australia, right? It's like the level of expansion there, and it's like how much one commits to this, and the number of companies that get absolutely bitten. And it's like it's scale size is almost irrelevant in this topic, is because it's like even the biggest and best companies really can get knocked if underestimating the complexities of going internationally. And so what that starts with is even just the ratings and analysis that you've done, but one still needs to execute this, right? So I want to go into a little bit deeper about your execution into Egypt. I mean, you started off, again, we talked about determination earlier, but also patience, right? It's like, I think this is the maybe the difference between courage and stupidity is about the stupidity is I'm going to do it all at once, while courage is like, I'm going to do it, but like, I'm going to experiment and like, and then take it from there. So like you started off with a bit of a pilot, right? What happened then, right? How like, I mean, from you to like this started last year. I mean, this is a year ago, right? And even though going from 0 to 500 still like a lot in a short space of time, like this took some time to figure out.
Yeah.
I mean, you didn't just happen overnight. It's like how did you actually do this from the opposite end of the continent?
Yeah, well, so I think the starting point and probably the most important factor of success is finding somebody to lead the expansion in that country. Not one of us, not one of the expansion manager people in the expansion team, but finding somebody in Egypt, a country lead or a managing director, whatever you want to call it. So I think we were lucky that we found somebody that's still our country director there, who is very good. Like we found somebody that we trust, and that also like on a personal level I connected with very, very soon. So a great guy that is taking the lead there. But then to go to your point, like yes, it started slow. We had to figure out that payment solution. So what happened is we started from scratch. We had nothing. We then created, we found 1 or 2 smaller e-commerce players that wanted to work with us. I think we did an initial launch with one of them, which honestly completely failed. Within 2 or 3 months, they switched us off. Like, they were very patient. For a while, they tried working with us, just like, I don't know why, but everything that we did in South Africa, technology-wise, just didn't work for these guys. It was a big mess. So we turned the thing off again, went back to the drawing table, and had to like do things, restart things. And then we were waiting for that relaunch. This company eventually said, "Listen, guys, forget about it. I'm not going to work with you guys anymore. You kind of we messed that up completely." But then we met with Noon, and one of the things we'd said is like, let's not go for the top 3. Let's not go for Amazon, Noon, or Jumia. These guys are the size of Takeoff, even bigger. Like, let's not go for the biggest client in the country. Let's start this small. Let's find some medium-sized businesses. But at an event somewhere, the Noon guys were there. Noon is the biggest e-commerce player of the region there. And, our country manager's there. The discussion started. And basically they told us, listen, actually, we are in the middle of starting to roll out pickup points. We feel this is a strategic objective for us this year. It's very important.
Yes, timing.
We're doing a pilot. Can you guys be part of that? So we became part of that. And 6 months into that pilot, without the cash part, they were just doing, so they were only it was very small. They were focusing there purposely. And at that time, there were 1 or 2 other companies also just starting our model, so kind of competitors. But they came back to us after 6 months and said, okay, we've kicked out all the competitors. We're going to do this only with you guys. We also tried to build a team to do it ourselves, but we love what you guys have done. We love the way it works. Product, clearly, you understand what you guys are doing. Product clearly is good. Your network is perfect. So that was an amazing step for us. So that was towards the end of 2023. So yes, it was a long time, but it was like we were piloting very slowly with this big company. So end of 2023, like, okay, cool. And then I said, okay, but guys, we want to obviously we're not just going to turn this on for only 20% of your volumes. We need to get the cash part. So that took a bit of convincing before they could trust us also doing their payments for them. But we showed it. We started again very small, another 6 months, and then mid 2024, so a few months ago, is when they said, okay, now everything, and then they turned it on completely. And that's since then, it's just like, the business there is growing very nicely. So that was a big part of it, right? It's like just being patient with this big mammoth business that said, okay, we'll do it, but we'll do it on our speed, and that takes a little bit longer, but obviously very robust, very well set up, very lot of checks and balances, so yeah, today it works well. And now we're bringing on other big clients, and now we're in growth phase. Now we're just trying to find as many businesses as we can to come on board.
So patience is often a very common trait for our entrepreneurs. And like even the example that I mentioned earlier with like these listed companies going to other countries with this geographic expansion, they kind of rush into it as well. Like, why were you different? And that might be probably almost an impossible question. But why were you different in your patience?
One is our business model. End of the day, all our success, like we're enterprise sales business. The reality of the e-commerce space in Egypt, South Africa, across Africa is really that there is a few very big players in the countries and a bit of a long tail, not that many in medium-sized businesses. That's just a problem that emerging economies often have. So serving an SME, a very small business, is something we still don't really do here and there, but it's like serving an SME is very different to serving a enterprise business. So we are always focused on those enterprise businesses. In South Africa, most of them work with us. Enterprise businesses take long. You don't have another choice. Like those guys don't move fast. So the downside of doing enterprise sales is that it just is a very long process. Corporates take their time. There's procurement processes. Like, as I said, in this case, it wasn't procurement, but it was like, very slowly testing things, slowly, bit by bit. But
yeah, but they're slow until they're fast, because once the experiment's over, then they just switch it on.
Yeah, then it goes on and then becomes big, and that's why. So it's exactly like that. It's nothing, and then poof, everything in once.
Yeah, sure, Lars. Again, I think the story's been absolutely incredible. There's so much that you've gotten into, so much value that we've shared here. I think, I'm satisfied. I'm full. I'm content with this meal of learning that I've gotten and wisdom that I've gotten from you from this conversation. So thank you very much for being on the podcast. yeah, coming to the end of 2024, looking into 2025, what does the next 6 to 12 months look like for you and for the business?
It's obviously growing. There's a lot of growth opportunities that we are sitting on at the moment, coming out of those bad years in South Africa and kind of refining our identity, and now being super focused has really led to increased growth, but more importantly, like very, very strong pipeline with amazing opportunities that we are sitting on right now that we expect to start, have been launching in the last kind of weeks and months, but expecting to launch even more in the future. So the future is looking very, very positive. And then in Egypt, obviously, we just got started there. So there it's like just that first, just scratch the surface, and now we need to like really take that forward. As I said, the mission and the vision is that we want to do this across multiple markets. So a bit longer term vision, not just the coming year, like a 5-year view is eventually we want to take this model into between 5 to 7 countries. So we are also still looking at that. What is the next country? Without, again, focus, as I said, is important. So without losing the focus on the two countries we're in, is there now maybe an opportunity that we can jump on as when it arises? But we'll do that, following an anchor client. So we won't just go and get distracted by something small. But if there's a big opportunity that arises and there's a few things in the pipeline that we're looking at, we'll jump onto that.
I mean, spoiler alert, it's probably Kenya, given that's where you want to go before going to Egypt. Maybe not. Maybe by the time you do it, the rating scales have changed.
Exactly. No, we'll see. I mean, depends a little bit, as I said, it depends a little bit on also what we can do with some of the bigger clients and where they go.
Fair enough. Lars, I guess just to end it off, what's the one question that I haven't asked you that I should have asked you that you'd like to answer now?
I think you covered it all. No, there's nothing comes to mind.
Well, thank you very much for being on the Founder Files. It's been an absolute pleasure to listen to you talk, to hear your story. Genuinely, it's something for me, as given what we do with strategy coaching and facilitation, it's like really inspired. Like, you are an amazing use case for like, this is how to do it like strategically and patiently, because this is what can unlock. Easier said than done. That's also my middle name. But well done for what you've been able to achieve so far. Well done for your expansion into Egypt. Well done for getting such an awesome MD that was brought into your business from the get-go. Well done for the patience, for the determination. Well done for being an awesome human. Thank you for being on the podcast. Can't wait to see how the next couple of years turn out.
Excellent. Thanks, Cameron. Cheers.
The nature of being an entrepreneur means that it's often very tempting to go broader and go new than it is to go deeper. And I had that exact experience when talking to Lars right now. Obviously, I was tempted at certain times to go a bit broader in the conversation, talk about different things around how he grew, different parts of his business. But just the opportunity and the excitement to go deeper in terms of the focus that they brought to the business and the ability for them to expand geographically in what they've done there, I found to be a lot more valuable. And the reason why I raise that is that if you are, like Lars, going through a bit of a questioning of the identity of your business right now, kind of lost track of who you are in your scaling journey, and looking at your strategy and thinking, how are we going to take this further? How are we going to unlock further growth? What are we going to be doing at our core that's really going to make us a scalable business? Like, if you're thinking about going internationally, then we can help you. That's why we exist. We are strategy coaches, strategy facilitators. That is exactly what we come and do, because you've got these ideas. How do you get this out of your head and build it with your management team so that you've got a strategy that you've got clarity and confidence in, and peace of mind for the people to execute with you? And so if you want to find out more about this, please reach out to me. Let's have a chat, and hopefully I can just share some of my insights, some of my knowledge, and give you some ideas around how to go about either this new shaping of your identity of your business, going down this next expansion strategy. So have a look, go into, again, description of this podcast below, go to Medavul's website, contact us, and you'll go directly to my inbox and we'll set up a meeting. So but can't wait to hear from you. And thank you again for listening to another full episode of the Founder Files. I hope that you found this as insightful and enjoyable as I did. I absolutely love doing this. I hope you love listening to this. So thank you again. If you enjoy this as much as I do, then please share this with other friends that you have, other people in your network that are either in the specific e-commerce space, like Lars, that you might be of interest in this, or any reason that you think that they could get value from this. It's the best way to support the podcast, and it's the best way to make me feel happy as the host. So thank you once again. See you next time. Cheers.